How much you need to earn to afford a Tesla Model 3. The Tesla Model 3 is a modern status car, but the real question is not whether it is cool, it is whether you can afford it without wrecking your finances. In this breakdown, we will cover what a Tesla Model 3 really costs per month, how the cost changes with down payment, interest and insurance, and how much you need to earn per year for each type of setup. Assume a 2025 Tesla Model 3, around $40,000, with a 5-year 60-month loan and interest between 4 and 7%, depending on credit. Your real monthly cost includes 4 main pieces: the loan payment, insurance, charging or electricity, and registration or miscellaneous costs. We will use 3 simplified scenarios. Frugal setup, bigger down payment, lower monthly. Standard setup, average buyer. Premium or low down setup, smaller down payment, longer loan. In the frugal setup, you put $10,000 down on a $40,000 car. Your loan is $30,000 over 60 months at about 4.5%. The loan payment is around $575 per month. Add about $150 for insurance, $60 for charging, and $40 for miscellaneous costs. The total is roughly $825 per month. In the standard setup, you put $5,000 down. Your loan is $35,000 over 60 months at about 5.5%. The loan payment is around $690 per month. Add $150 for insurance, $60 for charging, and $40 for miscellaneous. The total is roughly $940 per month. In the premium or low-down setup, you put $2,000 down. Your loan is $38,000 over 72 months at about 6.5%. The loan payment is around $660 per month. Add $170 for insurance, $60 for charging, and $40 for miscellaneous. The total is roughly $930 per month. The monthly amount looks similar to the standard setup, but you are in debt longer and pay more interest. Now, what salary do you need? A useful rule: your total car cost, payment plus insurance, should stay around 10 to 15% of your take-home pay, and going above 20% gets tight. For the frugal setup at about $825 per month, if that is 15% of your take-home, you need roughly $5,500 per month after tax. That usually means a gross income around $80,000 to $95,000 per year. To keep it closer to 10% and feel very comfortable, you would want take-home pay around $8,250 per month, which is roughly $120,000 to $140,000 per year. For the standard setup at about $940 per month, 15% of take-home would be about $6,300 per month after tax. That usually maps to about $95,000 to $115,000 per year. At 10%, you would need around $9,400 per month take-home, roughly $150,000 to $170,000 per year. For the premium or low-down setup at about $930 per month, the numbers are almost the same as the standard setup, around $95,000 to $115,000 per year at 15%, and around $150,000 or more per year at 10%. The trade-off is not the monthly amount, but the longer 6-year commitment and extra interest. Before you decide, run a quick sanity check. If you have high-interest debt like credit cards at around 20%, paying that off should come before a Tesla. If you do not have an emergency fund of 3 to 6 months of expenses, build that first. Ask what you're giving up, because $800 to $1,000 per month could instead go to investing, a house down payment, a business, or more free time. Also ask if a cheaper car would do the same job for your actual needs. Simple rules: keep total car costs under 10 to 15% of your take-home income, avoid very long loans like 72 months when possible, do not pause retirement or investing just to get a car, and if you earn under roughly $80,000 per year, be very cautious about buying a new Tesla. In practice, around $80,000 to $95,000 per year and up, you can make a Model 3 work, especially with a bigger down payment and lean lifestyle. Around $100,000 to $130,000 per year, it becomes more manageable if your other expenses are reasonable. At $150,000 and above, it becomes more of a choice than a strain, as long as you keep investing and building assets. A Tesla Model 3 can be a great car, but make sure it fits into a solid financial plan, so it drives you toward your goals, not your bank account in the wrong direction. Before you decide, run a quick sanity check. If you have high-interest debt like credit cards at around 20%, paying that off should come before a Tesla. If you do not have an emergency fund of 3 to 6 months of expenses, build that first. Ask what you're giving up, because $800 to $1,000 per month could instead go to investing, a house down payment, a business, or more free time.